Last quarter, what's happening with the market?
Well, it was really an interesting quarter. The thing that really kind of flavored everything was the expiration of the tax credit at the end of April. And so what we saw was a tremendous effect there. April may well have been one of the very best months this market has ever seen in terms of accepted offers. And May was probably one of the worst. And I hate to say it, but it was true. But if you take the two, if you take April and May, average them together, they're probably pretty close to what you would expect. But obviously many consumers pushed their transactions into April in an effort to try to take advantage of the credit. So as a result of that, what we're going to see starting in closings in July is a big drop-off, larger than one would normally expect. And I think what we have to prepare consumers for is that they'll look at that and say, oh my God, the real estate market is slowing down again. Not necessarily. What's happening is that the distortions that were created by the tax credit have completely messed up the normal flow of demand seasonally. And so all the seasonal patterns are going to be out the window this year. And we're just going to have to wait to the end of the year to kind of see where we end up. But there's some evidence that things are starting to return to normal, but it's still spotty, and it's just going to take some time to work our way through it.
So what does that mean for sellers?
Well, I think if you're a seller right now, and you aren't serious about selling, this is not a great time to be on the market. One of the things we also observed, and we saw this in the last newsletter, is that our inventory of single-family homes took a jump up in the February-March period.
Right.
Probably people trying to take advantage of the credit, perceiving that the market was going to be better. And so if you haven't succeeded, if you missed that wave of the tax credit, you've probably seen that in May and June and July, there hasn't been nearly as much activity. I think that unless you really need to sell and are willing to do what you need to do to kind of work your way through a very crowded market, you might be better off just withdrawing from the market and coming back in the spring, because I think things are going to be much more, we won't have the tax credit distortions, we'll see a much more normal arc to things, and I think people will be kind of back into a normal flow. But right now we're just in a vacuum that's been created by the tax credit expiration, and I think it just makes it really tough for sellers if you're not really serious about what you're doing and are ready to compete.
And for buyers, rates are fabulous.
For buyers, this is nirvana.
Right.
We have the lowest interest rates we've ever had, and in fact, there's a rule of thumb that you can use. It's called the 10% rule. If there's a 1% decrease in the interest rate, it means you can buy 10% more house with the same mortgage payment. Rough rule of thumb, roughly speaking. That's probably more impactful for you than the tax credit was. And so if you're a buyer and you're missing out on today's rates, there were rates quoted at 4 3/8 for 30 years last week. It's back at about 4.5 right now, so it's bouncing around by that 4.5, 4 3/8 range. Unprecedented. If you're not taking advantage of it, you're really missing out.
Free money.
It's like free money. And people are saying, well, gosh, nobody's, you can't get a loan today. That's really not true. If you have a very poor credit score, then you might have an issue. But even if you have a relatively low down payment, FHA is available for a lot of borrowers in that regard. Financing is a little bit of an adventure now compared to what it was, but most buyers, if they have decent credit, can still qualify for a loan. The lenders are eager to do it. It's just a matter of getting in there and doing it, taking advantage of it, because the rates are just very compelling.
How about different segments of the market? Condos, single family, new construction, what's going on in those places?
Interestingly, we mentioned about the spike up in single family inventories. Condos, we've seen inventories decline, which is very interesting, particularly new condo projects to the market. Of course, condos, as you know, often come in big bunches. Right. And given the sluggishness that we've had in the marketplace, developers have been very reluctant to bring new inventory to the marketplace. So what we're seeing now is a reduction in condo inventories that actually is even greater than single family. So that's good for the overall market over time. And there was a lot of interest in condominiums when the first-time homebuyer tax credit was pushing things. So we expect that to continue. New construction is still going to be very sluggish. The problem is that when you still have relatively high inventories, new construction just isn't as compelling. And so we're still seeing relatively low levels of building permits. The silver lining there, of course, is that will help keep inventories in line. And our guess is that they will decline again through the fall. And there's always a seasonal arc to this. They always tend to decline in the fall. They spring up in the spring. And hopefully next year we might see a little bit more traction for new construction, but I think it's going to be a while before we see new construction really come back.
So given the rates, are you seeing any more activity in investment properties, multifamily? What's happening there?
A little bit. It's not a flood yet, but I think that what we're going to be seeing is that real estate is a compelling investment right now. And I think this is one of the things that people are really missing. And of course, you say, well, he sells real estate. What else would he say? People have to remember a couple of things. Everybody lives somewhere. Housing is a necessity that everyone must take advantage of. And the demand for housing is not likely to go down anytime soon. The question is, how are people going to consume it? And so I think it means one of two things, or maybe both things for the market. Number one, as we work our way through this period and confidence returns, which we fully expect it will within the next 12 to 24 months or less, then we're going to see prices start to rise again as demand starts to rise and people start to say, oh gosh, maybe things aren't as dire as we thought. But for those that look at real estate's always been a longer term investment. Better if you can live in a home for 3 to 5 years, preferably longer, to really reap the benefits. If that's not your time horizon, those folks more likely now are going to be renters because that stands to reason. So I think income property investment is an opportunity that people should really start to think about if they're interested in creating a stable long-term investment that isn't going to be nearly as volatile over time as the stock market.
I think a few years ago, Warren Buffett said, when it's raining buckets of gold, grab as many as you can. And he was talking about the market correction a couple of years ago.
That's right.
Real estate's probably in a similar spot.
Well, it is. Well, another thing Buffett said, I paraphrase, is, when people are fearful, be greedy, and when people are greedy, be fearful.
Right.
And of course, we saw that work out very well in the early part of this decade when people were being very greedy, and his advice at that point was, and of course, we saw what happened. And so now when we're in an era where people are thinking, gosh, is real estate still a good investment? My advice would be this is the time to get into it because You've got the very best of all worlds. Prices are reasonable, inventories are high, and financing is the lowest it's ever been. So your cost of ownership long term is going to be as low as it will ever be. I can't imagine it's going to get lower. And of course, famous last words. But certainly it's a very compelling environment. And if you look out over the long run, and you believe that housing is going to ultimately be something that everybody needs and has to consume, which it seems on its face to be obviously true, then there's a fundamental value here that we're very close to, and your cost of ownership is really low. So now is the great time to take advantage of it.
Great. See you next quarter, Dave.
Thanks, Jim.